Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. On 2nd of May, I given the forecast for the entire week, 2nd to 6th of May. And today we are on 6th of May. I'll try to review the market between 5 and 5:30 GMT and explain to you how exactly the live market analysis and also the forecast are correlated. Now, let me just go to the top of the forecast, what I have given it on Monday, and try to understand where exactly the market is. Now, this is the forecast I have given it on 2nd of May, and they are expected to make the rise and then start making the slide alternatively with that of the rise. And from today, after a brief dip on the European session start, they are expected to make a quick rise and rise for the non-farm payroll. So if you have noticed that this being the first week of May, the monthly trend reversal time, the players gained very big in the case of Euro and GBP and dropped them all the way and then wanted to gain using the non-farm payroll. And this is what called as the middle level consolidation with either way stop-ins. So they have done the upward stop-in by extending the rise on Monday and Tuesday. Then they had done the downward stop-in yesterday, and also they are expected to make a brief dip during the start of the European session and then start making the gain before and after that of the non-farm payroll. And then after the gain, from next week onwards, they will continue to gain upward and shift to the trading zone to that of the higher level consolidation with frequent upward stop moves. At that time, all will turn bullish and they will try to take buy and sell trade, and the players will distribute all their buy positions afterwards and then start making the slide again. So this is how they continue to make the lower level consolidation with the frequent downward stop and then go to the middle level, then to middle level consolidation with either way stop-ins, so that if you go long and wait for a long time, you are discouraged. If you go short and wait for a long time, you are discouraged or you are forced to cut the position. That way, they induce the traders to lose the position as well as the money. Then afterwards, they continue to gain the levels one-sided to the upside and then start making the higher level consolidation with a frequent upward stop. So this shift in trading zone from time to time, we need to understand. Only then you will be able to do the fearless trade. Otherwise, you will simply think that, okay, market is bullish, bearish, and then you try to go in for a distressed trade of buy and sell. Okay, I have to cut the position, then go sell and buy, and again I have to cut the position. This way, if you try to do it, you will be trying to take only chances, and in that you may not be able to show any progress in your trades and earning money. So they made the drop in the case of Euro and GBP as well as in the case of USD and USD CHF on Monday. They made a massive drop, and then subsequently they started gaining the levels slowly in the case of denominator currencies including USD CAD. They came down to 1.25 area, and from there they started gaining the levels. Now, after gaining some more levels in the case of the denominator currencies, they are expected to gain the levels in the case of numerator currencies without dropping the denominator currency. This way, they do the contrarian move. If you look into this, we'll be able to understand that Euro, GBP as well as USD and are showing negative net change as a contrarian move. And the denominator currencies like USD, CHF and CAD are showing the positive net change, and then Australian dollar is showing negative net change, and they are all showing the USD gaining move, whereas Euro and GBP also showing USD gaining move, but briefly, but USD Yen is showing USD weakening move. This sort of contrarian moves, they continue to do it in order to handle the crosses. Now coming to the levels in which they are expected to swing. So we have seen that from 1.16 area they had dropped it to 1.1386 yesterday, and today's low is 1.1393, just holding low, and they wanted to gain back very quickly, aggressively, further of the non-farm payroll. This is how they try to make the moves in the market. If you carefully watch it, the market was expected to come down on Monday, and it was showing I will show in the next slide, then how exactly they made only a brief downward stopping from the low set on Monday. But after gaining, when they dropped it, it appears like a very big drop in the case of Euro as well as GBP. So in the case of GBP, they came up to that of 47.69, and the low is 44.44, and they are expected to quickly gain the levels to 47 again during this day. And in the case of yen also, they made the drop to 105.55 and then started gaining the levels. So this is how they make the extended downward stopping before making a rise. And also in the case of CHF, they came down to 94.46 and then started gaining the levels. And now they are holding it around 96 area. Then in the case of CAD also, they came down to 24.61 and then started gaining. Already they gained up to 1.28 area, and the further gain they will do it today. And in the case of Australian dollar, they came down to 74 area, and then they are expected to gain back quickly above that of 75, and then start gaining it one-sided during the day. You'll come across a total somersault in the case of Australian dollar. Now it is showing about 78 pips negative net change, and it will gain about 100 pips net positive net change by end of the day. Then you will be able to understand how aggressive the players are. Now I noted down the initial lows and the highs in all the four majors and two commodity pairs by 3:30 GMT using the live market quote page. So if you compare it with that of Monday, you find that Euro formed the low 1.1453 but came down to 1.1444, and from there they just dropped about 50 pips and then came down to 1.1389 yesterday, and 1.1393 is the low set today, and they are holding it, and they are expected to quickly gain the levels and go above all the highs what they are set. In the case of GBP also, from the Monday low, if you compare, they hardly made a 50 pips drop from there as a downward stop, and then they will start gaining the levels. Now compared to that of the current market levels, 1.1393 and 1.1409 is the high. 1.1408 was the initial high. They cut and formed 1.1409. So that shows that they wanted to gain the level. These are all the signals they gave it. And in the case of GBP, 1.4476 is the low, 1.4494 is the high. They not breached the low or the high. Then USD yen 107.04, 107.42. They not breached the low or the high. Then CHF 96.77 and 96.87, just a 10 pip spread, and they are not breached the low or the high. And in the case of Canadian dollar, 1.2852 is the low, 1.2881 is the high, they are not breached the low or the high. Then Australian dollar 73.95 and 74.79 are the lows and the high, they are not breached the low or the high. So you find that hardly so in the case of Australian dollar, they cut the low and came down to 73.82. and then they are holding around 73.89, a brief downward stop, and they are done it before making a rise for the day. And the other currencies, of course, they are not breached. Sorry, I think that live market code page was freezed, so it was not changing. Okay. So from the live market code page, we are able to understand, noting down the initial lows and the highs. They just breached the high in the case of euro. Rest of the currencies, they are not done anything. They are not breached the low or the high, indicating that all are waiting for the non-farm payroll to be released so that they expect the market direction from there. But the players are expected to make a quick rise before that of the non-farm payroll during that of the European session, telling some stories and then hold high. Then people might think that that quick rise before non-farm payroll was mainly to drop the market. But after that of the non-farm payroll, they make some brief volatile moves and continue to gain the levels as a market surprise. Always keep in mind the players bring in the surprise, thereby they are able to trap the traders. So if they don't bring in the surprise, then the traders become well informed and they don't lose the money. So nobody is willing to lose the money voluntarily. And so what they do is they make the situation helpless for that of the traders. They trade without a stop, and or if they take more position and avoid keeping the stop, then they give the margin call. So these are all the type of moves they make, and thereby they are able to earn from that of the traders. So keep in mind that we should not become victim to that of the act of the players. Ultimately, that is the most important thing, or the basic concept of trading, that we should not be fooled again and again by that of the players. So we know that the market is being handled by that of the players. That is why they bring in the whipsaw moves in the market using the bank terminals, and which we will not be able to do it with the help of the with the help of the trading platforms. So when they make such moves, we need to understand why they are making such whipsaw moves in the market, and that is mainly to bring in a fear to that of the traders, so that when the traders are under the grip of market fear, they go in for a distressed trade. And once the traders go in for a distressed trade, they lose the money. So being a smart trader, wait for them to make any quick move on the upside or the downside. If they make an upside rise, stop cutting the new low for 30, new high for 30 minutes, take a sell position. If they make a quick downward move and stop cutting the new low for 30 minutes, take a buy. You'll be able to see very quickly the profit. So actually they make the false move before that of the data release. So that will indicate what is going to be their intentional move later on. So you can identify the false move. If the false move is on the downside, buy. The false move is on the upside, you sell. You'll be able to quickly grab about 30 to 50 pips profit. Okay, there is a question. Or N cross is also expected to gain. Yeah, Euro Yen and GBP, they are expected to gain. Now you come across them, they are showing it in the negative net change. At the end of the day, you can just compare it and see that all the three will be in positive net change. Thereby, Yen crosses, Euro and GBP, they are expected to gain simultaneously. There are any questions, you can ask me the questions. I'll explain. Meanwhile, I'll also answer the questions which are asked here. Jason, how is the USDN movement during that of non-farm payroll? USDN is expected to make a small downward stoppant around 107.04 during that of the Japanese session, late Japanese session. So that is why I kept a buy limit order at 107.04 if they fill, and I kept the stop to limit the risk 106.74. And once they go above, then I'll keep stop at entry, and they are expected to gain the levels to 108 to 109. Then I will trail the take profit order and also trail the stop in the profit making position to maximize the profit. Then check forecast toward USD CAD next week. Please, do you think that now low has been formed? Yes, they have formed the low as 1.25 and they will continue to gain it to 1.33 to 1.37 area in the case of USD CAD. Then I kept the buy limit order 1.4476, that is the low what they are set as the buy limit order with 30 pips take profit order with 30 pips stop, or the hedge order to limit the risk. Then in the case of USD Euro also, I kept near that of the low, set the buy limit order with 30 pips take profit order and 30 pips below the hedge order. So this way, once it is filled, once the limit becomes the position, you can watch and try to keep stop at entry in the positions once they start making profit for about 15-25 pips, and then remove the hedge order so that we use the hedge order instead of stop in these conditions. Afterwards, we use the stop in profit making position and trail it as they move in our favor, and also trail away the manually trail away the take profit order, so that if the market comes down, suddenly it will hit your trailing stop with a minimum profit. Then we will re-enter again a buy. And if they gain again and again, then we will move the trailing stop on the upside and use a trailing, take profit order on the upside, and also move the trailing stop in the profit making position, so that we will try to maximize the profit that way without taking risk. So ultimately, once you are seeing the position in positive zone, we do not want to see that again in negative zone. No, that is very vital. Because of greed, sometimes what happens when the position is positive, in a positive or a profit making level, then immediately we feel happy out of greed. We don't bother about the trading strategy. But suddenly they may just reverse the market and drop 100 pips, and you will be seeing pathetically that the position is making about 70 to 60 pips loss. So avoid facing such conditions. Once the position makes profit of 15 to 20 pips, try to keep stop at entry, so that if it is filled, doesn't matter, we'll re-enter again. We are not going to lose anything. Then Aussie, the current level is good buy. Yes, you are right. Aussie, we can really buy, it will be able to make a surprise upward move. These are all the market timings. So early in the late sessions, they handle the majors. Mid sessions, they handle the crosses. So note down when the late Japanese session starts. At the time, if you watch the GMT time and see how exactly they start making quick moves in the case of majors. Till such time, they will be making the swings between the high and the low without breaching the high and the low in the case of majors. But they will make contrarian move. As a result, the crosses will make quick moves during the mid sessions. So that is how they handle the majors and the crosses alternatively. So we need to understand the timing they use for different type of moves in the market. Accordingly, take positions. Simply as soon as you open the platform, you look into the market and look into the chart and take some positions, then your waiting period to book profit will be prolonged. And in the process, you might lose your patience and cut the position. So avoid doing all those things. So I just reviewed the forecast, what I had given it for Friday. And so I'll come back on Tuesday. Monday, I'll be out of station. So Tuesday, I will give the market forecast for the next week. It's Tuesday, 5 GMT. At that time, I'll explain to you how exactly they are expected to make the trending move in the market on the upside. Okay. So if you've got any doubt, you can ask me through chat or ask me through the email. I have given it to you, and you follow the forecast and see what happens during the non-farm payroll. Then you will be able to understand the power of the forecast. So wish you all happy trading. See you on Tuesday, and we will take up further forecast as well as the market reading. Thereby, we will be able to consistently earn money from the market. Thank you, one and all. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. See you on Tuesday. Wish you all the best. Wish you all a very happy weekend.